Hey everybody, this is Jim at SP500chart.com. It's about 4:30 on September 17th, 2014, and we're going to take a pretty quick look at the chart here. Again, you're going to know what I'm going to say already because nothing has really changed. But that said, I need to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. As you can see, we had a day that finished very slightly up after a little moment of volatility. Right, probably coinciding. What you want to bet that happened at 2:30 or 2 o'clock, excuse me. So anyway, that said, we stayed over this broken resistance line as we thought we would, and we also came up and retested the highs that were hit, the all-time high in the S&P that was hit in early September, and that's where we started to give up a little bit of the gains. Closed over 2,000. That's all nice, all fine and dandy. The thing that we're looking for now, because we're only 0.12% off of yesterday's close, it's essentially the same situation. And that is, we either break through this neckline, and having accomplished that, not saying that's a done deal, but saying a forward-looking statement, having accomplished that, we would then look for a target up around 2,100. And that's still, I think, very much a doable thing. But we got to take this guy out. It's got to happen. And until it does, it hasn't. And until it does, we don't have a reasonable expectation of 2,100. Even though it all looks great right now, you don't have that in any way. You don't have the wind at your back from this nice chart pattern. So I'm still looking for a break of that neckline. If we are looking at the chart and looking for a possible bearish situation, I would say we should have support at this line. If we were to sell off to that level, I would think we would find support if it were to happen tomorrow around the high 1980s or around 1990. Probably the high 1980s. So if we were to sell off tomorrow, I think that would be probably no more than 13 to 14 points, or roughly 0.6% off where we currently are right now. And I really don't have a strong feeling about that one way or the other. So what I do have a strong feeling about is this line serving as support, and until this line is broken, this line serving as resistance. If we zoom in a little bit and we try to make a little sense out of things, it's a little bit of a stretch. I just don't see anything here that I would say this is what I'm expecting based upon a chart pattern. We could say that this was a very small little bull flag, and that we also had an even longer but equally narrow bull flag right here that broke out to the upside, came down, and it was with a little volatility. And like I said, we finished the day just a little bit over 2,000 and up just 0.12%. Hardly worth writing home about. So guys, the the same thing holds for tomorrow that we were looking at today. And that is, and it's good that we came up to challenge that high, but we've got to get over this neckline. Get over that neckline by a decent percent, say something in the 2020s, 2023, 2024, then I think we start to say that we have a confirmed inverted head and shoulders pattern with a 2100 or better target, because we don't know when this line's going to break. If it breaks at the end of this week, then our target would be more like 2108. So at this point, if we break, it's safe to assume it will be better than 2100. How much better? Don't know yet. So guys, that's it. Nice move up, bull flag, breakout, but running into resistance at this neckline. I am keeping an eye on this line, and I'm also keeping an eye on these other various support lines that are underneath this. If you're looking for me to say, well, what is the bearish case here? Well, I don't think there is a bearish case, a significantly bearish case to be made, as long as we stay over 1900. Because we have a number of support lines that are kind of in that range. This one right here, this blue one, would be at 1900 in a week and a half, and I don't see a 100-point loss in the markets. If we trade normally, barring some very serious world event. But really, I think we would need to take out this previous low for me to really get significantly concerned about the health of the S&P. Right now, everything so far looks to be playing out just as I had hoped about 2.5 weeks ago when I first mentioned the possibility of this inverted head and shoulders pattern. It still looks like it. Let's see if we get a confirmation of it with what's left of this week or early next week. So guys, there's your video for September 17th, 2014. I want to thank you for watching. Thank you for your support, and let's see what the S&P holds for us this week and getting into next week. Take care.